how things have changed in the markets. We're seeing a lot of exciting things going on. We're seeing crazy times for people involved in crypto. We're seeing all sorts of shady characters wrapped up in all sorts of shady business. All sorts of shady goings on. But that doesn't affect those of us not involved in that space, but it is interesting to see the extent and the depth and the scale of the cons that can be pulled. That this Sam FTX guy is now making his escape to Argentina, allegedly. Maybe back to the Bahamas. Oh boy, oh boy. And no one noticed until it was too late. No one stepped in. No whistleblowers. Isn't it amazing? You'd think in the world of open internet access there'd be whistleblowing all over the place, that we'd all be getting red-pilled en masse about the inside scoop of every industry, every sector, every government agency. But no, we're not. If the whistle is being blown, its sound is being muffled or suppressed. Or maybe it's not being blown at all. Anyway, here's some lovely lines on the euro. It came down, it tested 96 cents relative to the dollar. And it's moved up strongly since. And we're in this whole area up here. We're close to taking this wick. We've come into this horizontal resistance. And there's a little dump zone here. So this is not, from a charting perspective, it's not a good time to be getting in long, unless you're getting in light, unless you've got a good reason on lower time frames. Now is not the time to swing big with long positions in the euro. Even if it does keep going up, even assuming the dollar tanks, you've got to practice consistently good trading methodology, and this is you don't buy when price is doing this. You just don't. There was a lovely positive reversal, not quite on RSI, but bigly on the composite indicator. It's hard to say where next for the euro. I mean, one feels like there's some consolidation required. That's one heck of a weekly candle. Maybe we need to flag out and backfill. Maybe test this line here. I don't know. You can see that resistance is actually on the weekly as well. That's not just a daily resistance, horizontal line, but that fits levels also on the weekly. You go down to the 4 hour. Yep, we're coming into this area, this zone. If you have a look on the hourly, it's got a sort of slightly rolling over look to it, but price will do what it wants. Now is not a great time to be buying, unless you want to go down to the 15 and spot yourself, a positive reversal and get in with reasonably nearby stops. It depends what the dollar's going to be doing in a more sort of macro sense, I suppose. I mean, it looks like it's time for it to take a turn. This is a lovely test, dump, test. Those 3 wick spikes on the monthly chart. So 1, 2, 3 months. That's a quarter of testing and then dumping. But we've come into this big black line. Excuse me. Which is a hypothetical support level. Also this horizontal level, which is a fib, a big fib. And it was this fib up here which contained the bodies of the candles on the monthly at the 70%. This is the 61.8. And it's just sort of nudged underneath it and closed underneath it. But again, we may want a breather. We may want to sort of flag out a bit, and it could be quick. It probably won't. You need to test everyone's patience. That's how you tend to lose money in trading. Is being having your patience tested. Then look at this. I'm just idly, like I'm doodling as I'm talking, basically on the charts. And look at this. What I found. That's a beauty. That's a thing of beauty. On the RSI. Oh, look at that. It fits on the lows as well. Ooh. That's the monthly. There's the weekly. We've fallen out of this channel. What we've come into, again, these are longer term potential supports. This is the origin of the recent up move, originating in the week commencing the 8th of August. I'd say this is a good resistance level here. This whole noise in here would be a good resistance level, capturing the body, and the wicks on these two, encapsulating a good area. Subjectively. So yeah, we're below the 14 band. No weekly divergences. If we go down to the 5, no divergences. If we go down to the 3, still no divergences. So that's that. Daily, brutal move, brutal move. Interestingly, in some assets, I think I was watching silver. We had these 2 days of straight down in the dollar, but there was actually a day and a half of consolidation, followed by not even. I'm not sure silver exceeded by the close. Get some daily lines on here. Yeah, so basically, in these 2 days, the dollar just, nuked, but silver didn't. If silver had moved proportionately to the dollar, we'd have probably made it to $24 already, But instead, for the most part, I mean, yes, there was this. This got everyone very excited, including myself. It was much more sort of flagging out. If we ignore this, this turned out to be a unreliable sort of fake out type move. But we were nonetheless flagging out. It was head and shoulders that turned into a continuation pattern. We tested the breakout here. We've moved up. This is looking very good for silver, but we're not quite ready to discuss that yet. So, a bit of a disconnect from the dollar. So the dollar made its high on the 28th of September. I say we're going to ignore. Silver made its low on the 1st of September. There's the 28th. So relative strength against the dollar, and we've made this breakout here. Now maybe the fact we've done this is more important than we didn't just have 2 straight rocket days up as the dollar fell. Maybe what's more important is the symbolic importance from a price action perspective of breaking out of all these resistances here, and backtesting. Small divergence here on composite index. Aye, should we be worried? Let's get down to the 4 hour on the dollar. Maximize price. Yeah, there we are. So you can see we had this channel. People might have thought it was a bull flag. There was a desperate attempt to save it here. We took these wicks that we sort of do, but there was no ammunition. No fuel left. If you pulled up RSI, you'd get a monstrous negative reversal here, and then we dumped it. Just dump. We may revisit again. Oh, I don't know. We could stump out. We could. Hourly. As you can see, this whole area really, we boxed up everything under this big 61.8 down to 10.4, 104 rather. That's 10,400 cents, I guess. Or tenths of a cent, hundredths of a cent. If this is all a big area on higher time frames, let's go back up to the weekly. Maybe we need to come down to this top, which was also this top, which was also this bottom, which was also this retest here. It could be this is a more pivotal area that we need to make it to, and then maybe we get some fanning around. So maybe we might continue in more or less. I mean, there's resistance, there's resistance. If we don't just go straight down, that's where you would want to try your luck on more shorts until we get at least into this noise down here. And maybe lower, maybe this next fib here. So what I'm saying is I'm short biased, but just as the euro is not in a good place to sell, to buy rather, the inverse opposite is true for the dollar. It's not looking from just from the look of the chart, ignoring the sequence of events, just looking at the damn chart, it's not in a great place to be selling immediately at any kind of size. But you would be looking for those opportunities as and when you could, because of the overall context, because of the overall look. Stocks had an interesting time. Putting in a big low on a monthly trend line was Nasdaq, and also on the pink monthly. Let's zoom out and see about that then. So all these blue lines are duplicates. I don't know which one was the original line. I might say this because it captures these bodies in this wick and then copy pasted. Well, it could have been this one, wick to wick. But they've provided a wonderful middle zone, a top zone, a lower zone. Again, these are very long-term lines. These orange lines, duplicates of each other, capturing this left shoulder, this right shoulder. We fell under it, but then look, we've recaptured it. We've gone back above this orange line. This is very bullish looking. And the fact that we've tapped on this blue line and found support, and this wick, they tried to sell it down. They tried to sell it down back through the body of this candle, and it just got eaten up into that classic sort of dragonfly look. If we lose, again, the orange line here, this long-term trend line that fits Nasdaq, it's just a line of angle that fits Nasdaq on long-term charts, and it intersects in all the right places. It also coincides with this horizontal level here, which is the bodies of the candles, which is also the bodies of the candle lows here, which is also a closing low on the monthly time frame. So if we lose this, basically what I'm saying is, if we lose this, that would not be good. I feel like we're at block nose now. On the weekly though, that's caught up in a lot of chop. We regained it once, fell under it, regained it at least once, 2, 3, 4 times, whatever. But that's a big candle, and again, maybe a retracement would take us back down deeper. Potentially. That's another big level. Make that a bit thinner, a bit skinnier, because that's on the weekly. We need to make that faster, because that's on the monthly. That's on the monthly, but it's probably fast enough. Yeah. Daily! There we go. Looking alright on the daily. But again, just like the other anti-dollar assets like the euro, we've taken these wicks, we're coming up into these dumping candles. Not a great time to be buying, unless you're going to go down again to, the 15 and be like, crikey hecky, we've made an extreme new low in RSI and indicators, and we're still, we're taking these lows and throwing on a bit of a buy just for the sake of it. I don't know. But we'll look at internals and breadth and so on in a little bit. Good luck on the S&P. And again, there was one reversal, two big. Fuck's sake, come on. Two big reversals, and I've got a little dot here. There we go. Finding support at a key area. That's a weekly line. You can see it's been important throughout, and it tested it on the underside, broke above it, back tested it, and then whoosh, off we go. This was resistance. It came near it and backed off, then just ploughed right through it. We could probably. Oh, look at that! Right through that as well. Right through those candle bodies. So. Maybe that'll be a support. If we retrace back to here, then here, then here, 3 different levels of support. Because in context, and then there's, look at these VWAPs, these anchored VWAPs that we might challenge. We pull out on the specs. Look at the weekly. That's a good look. Look at this shit. Look at that divergence. And again, look at the way we just spiked the rail, the mid rail of this price action, going back a long, long way. These are, what are these rails? Weekly rails. Weekly rails. Good stuff. Great. Look at congested, spiked it, then went above it. On divergence, great signal to start getting long. Great signal to start getting long. Hourly's got, yeah, all kinds of divergences, and the worry is, of course, that basically everything under here, this is, you know, it's the stem of the flower, very fragile, very empty, and again, you know, the head of distribution is going to overweight, and we need to plough back in and fill it up. Type of thing is the concern, I suppose, if you're looking for unrelenting bullishness. So while we're on the subject of internals and breadth and the stock market, the broad market, here's cumulative NIAD. You got the momentum divergence here at those lows, and then the positive cross, and then, you know, we broke above the 14. We've stayed above the 14, and we've had this sort of more positive price action since. You saw the divergences sooner and earlier in Rinya. Trend line here, break, back tested the horizontal level, up. NEHL, and again, lows, new lows, but diverging very strongly positively, and we're starting to nudge again. We're testing this zero bound again, which delineates bull and bear markets. Can they flip it? Can they flip it convincingly bullish? If we get consecutive closes above zero, above, that's probably about 60, something like that. You saw it again on the percentages of stocks over their 50-day moving average. Big divergence on the indicator itself, and on the indicator, on the measure of breadth rather than on the indicator. High yield, moving more or less in conjunction with S&P, no real advantage there. Finally seeing a move in discretionary, but this has lagged. The market has moved ahead of the ratio of discretionary against staples. This is supposed to be the reason of the point of having this is to have a leading indicator, but this has lagged. And then we're moving on to metals, I suppose. Let's have a look at silver. Let's go to the quarterly. That's a good look. That's a very good look. There, 1815. I had 18. I remember that rings a bell. It was 1814. I was banging on about a few months ago or a few weeks ago, either on Twitter or on videos that I filmed and then never could be bothered to upload because it takes fucking forever. And that's why we've got to be looking at just the look of this, just the way it looks. If you've stared at these charts long enough, instead of going outside and enjoying your life, you've been staring at charts in the hopes that you'll make money and then be able to start enjoying your life. This is galactically bullish. This is fantastic. And it looks like we're going to do something ludicrous, like go to, well, above 50. 60 would be a reasonably tempting offer there. So there's, if we go on the close, there's the Hunt Brothers. There's whatever that is. Does it fit anywhere? Oh, it kind of does. Yeah, it kind of does. Can we get a fit on these wicks, on these lows? Yes, so again, this is the, look at this is the accumulation underneath. Upwards, slightly upwards accumulation. Not breaking these lows and accumulating below them, but accumulating in this channel here. So big supports in silver, worst comes to worst, is $10, $11, $12. Because we've had 20 years of inflation since then. Sure, silver was in the dumps at $4 or $5 here, but that's 20 years ago. A lot's changed. Is there any more good fits on here? That's a good fit. That's a very good fit. I'm going to have that one. Any more good fits? Nothing convincing. I mean, it's nice that it captures this low here, but we don't know about that. What about on this wick low? Well, it captures the body here, it captures the close on quarterly, but I'm not a massive fan of it. Oh, beautiful, and look at that. From wick to wick. From 83 to 2011. I'll take it. That's beautiful. Copy and paste, guys. The monthly. And these were my zones of despair down here, where I would have started selling possessions to buy silver. Maybe, no, not relatives. I like my relatives too much. You get the back test. It's not only this big green level, 1814, 1815. It's also this action. The rails that were defining price action highs, now flipped, defining price action lows. I had this big chunky line on here for some reason or other. Let's get rid of that. We don't need that anymore. The only issue is, from a negative point of view, is look where we've come. Just like the euro's taken out of a load of wicks, filled a vacuum, and is not an ideal buying territory, neither is silver. We're coming right up again into these lows. We're testing this high. There was a big resistance point before, turn support. Can it turn decisively resistance again and suppress silver back under it? Getting silver back under this is going to be the big challenge, I suppose, or the big goal from a seller's point of view. To see if that happens. But assuming the larger picture is dollar weakness, the larger picture is all these scam assets. You can't trust don't trust anyone. You can't trust anything. Having a shiny metal gimmick, or in my case, a leverage trade on derivatives based upon shiny metal gimmicks, it suddenly seems like the vastly superior option, doesn't it? I mean, fair enough, my broker could explode, but I mean, but if they're a big broker, this isn't it's some sort of dodgy Cypriot broker or something. This is legit broker. Then everyone's broker will go bankrupt, and it will be in so much shit it won't be worth counting. Of course, being in the UK, the politicians have got to be able to buy and sell to make tax-free gains. All the insiders, who don't want to actually hold the shares, they want to use the derivative, surely. Massive advantage for them. They'd really be shooting themselves in the foot. If I was an insider, elite, I would not mess with the spread betting markets. I'd be using it. Oh lordy, would I be using it. Anyway, yeah, we went to the green zone on the monthly RSI. Big lows on composite index, well below the composite index lows that defined the lows of April 2020, March 2020. Oh, if only we could buy silver again at $13. That divergence, that positive divergence. It's like that's nicking that green zone on the close on the RSI. Beautiful stuff. So anyway, my overall bias is to the fucking moon, and in quite short order. I'm saying this with some confidence, but the key is, of course, to always trade very sensibly, in spite of the confidence one may feel, because the market will turn like a London taxi. It will turn on a penny and come after you with its angry chainsaw hands and pull you apart. Weekly, and I've been chainsawed in tender areas, and you've got to take responsibility for yourself when that happens. It's usually your fault. Usually, always, sometimes, never, or always. Usually. Let's go with usually. Hopefully that's humble enough to avoid being humbled by the market. Inverted head and shoulders here. Look at that. That's lovely. Head, left shoulder, right shoulder. On the RSI. This was actually the head. This was the left shoulder. This was the right shoulder. And then we were breaking out before we broke out in price. Divergences all over the place on the composite index. Again, if it's too much too fast, I would look for support to post up at these highs, and then here, and then you don't really want to be going. I mean, the point of origin is back down here. The point of origin is back in the 1920s, 30s, 40s. Hopefully it doesn't come to that. That's all I've got to say. Daily. And here we are on the daily. With a bunch of yellow lines as well to define. Probably get rid of that one. I'm not very sure about this one. It's not a great line, but I'll keep it in case we do like a back test, somewhere along the lines in these areas. On the diagonal, and if we look at the gimmicks for silver, the breadth and the ratios, well, I guess ratios, there's no breadth, is there? Tip shy. So, excuse me, the inverse of real rates. This wants to go up. When we see this going up, it means inflation. So real rates are losing out. You may as well put your money in silver. Real rates are rising. Why would you want to own a rock that gives no return and interest? And silver's actually moved ahead of it. We've seen consolidation, but silver was actually refusing to make new lows as the tip shy was making new lows. So again, an indicator, a measure rather, that one uses that's meant to give you a head start on things is lagging, it seems. So I suppose there's two interpretations of what this means. This is hidden weakness or innate hidden strength in silver. Either it's going up or it's going down. Either it's weak or it's strong. It's very good. It's very clever. Against stocks, silver actually making the low against stocks here, coinciding with its price low. Well, in relative to stocks, it was much stronger at its next low, and it made a high, and it's pulled back since. And we need to, we want to see it. We want to see it finding support basically in this area on the moving average. Silver against gold. Silver is the asset that should make up the most ground. It should make up a lot of ground against gold, having in the rush to own something solid, and in the inflationary context, or rather the deflation potentially of other assets, we're going to get a mix and a transition of phases, depending on where you look. There'll be horrible inflation, for example, in, I don't know, food and fuel. There'll also be terrible deflation, presumably in things like wages and, I don't know, maybe house prices or something. At least in relation to hard assets, commodities, things like that. I'm going to go a bit above myself now. Above my pay grade in terms of analysis. It doesn't really matter. So I understand that silver is supposed to gain more strongly relative to gold in these kind of environments. And here is the Japanese yen against the dollar. The yen is about the furthest thing from the dollar you get. It was pounded into oblivion in USD JPY. This is like the inverse of that, if you like. So the fact that we see the yen recovering and recovering dramatically bodes well for all anti-dollar assets like silver, which I'm long and holding long from, good prices plus an additional add higher. There's silver on the hourly. We've looked at that. What's uranium up to? We've not looked at uranium for a bit. Oh, no, but these levels here are indescribably important resistance. If we start breaking up above $25 again, it's showtime. Bigly showtime. I'm probably doing the wrong thing by holding silver, because this will just go. I don't even. I mean, it doesn't even bear thinking about what will happen to uranium. Looking at this is making me want to transition my holdings into uranium. Here's a similar type look, where you get this move up and then you get this scraggly, but you can see it curling up. You can see it moving up with just the look of it. It's squiggling. It's putting sort of a left shoulder head. That doesn't make sense at all, does it? Because this is, you know what I mean. 1, 2, 3 humps. We went lower, higher, and this is such key resistance. It really is. It's. I can't emphasize this enough. That's the monthly. There's the weekly, and again, price might have been terrifying everybody with these jerky, volatile movements, but look what's happening in the RSI. It's wedging. It's a picture perfect. It's a thing of beauty, and again, look at this important green level here. We keep teasing under it, but then we just keep going back above it. And this time, I mean, look, it's teased, it's held, it's tested, it's back tested, it's gone up. It looks really good. But again, low time frames, just like the euro, just like silver, we're coming into this sort of shelf here. We may need to pull back. Maybe all our dreams will be dashed, and we will see something, something like that. Excellent drawing there. Excellent drawing skills. But in principle, looking at the higher time frames, you'd want to be looking for any way to get long uranium, as long as you're not going to burn yourself too badly when it does retrace or whatever. Semiconductors, same thing. Look at the level it's come into. This is an old zone, an old level. I've had this marked on forever and a day. Big, extending, stretching its neck up to reach those tall leaves, and it's not just going to go. It might. I mean, it'd be one in a 20-year event if it just went like that vertically up. And it can do. The market can do anything it wants. But again, not a traditional buying area, not a conventional buying area. But, is this a relief rally? Is this a 1-2 and we're going to dump out with 3? And there'll be horrifying dollar strength that will, again, spoil the party completely. Who knows? Oil. This is American oil. This is US crude. 60 is a big level. It's possible we'd come down and test it again, but after this huge run back up again from negative oil futures, the cash went down to $7.64, $7.63. We've burned off a lot of momentum, a lot of negative momentum. and we've just been capping price here on this big yellow trend line that's from the monthly, and we're trying to hold above this red level now at 85.20. If we can do that, then maybe we can break out 92.70, and then maybe we'll start making ludicrous new highs in a world of increasingly inflationary environments. You know, for oil to go up, all that happens, it needs to happen is the dollar to keep going down. This is oil against the dollar, so the fundamentals of oil need not even change that much in terms of world trade or use or consumption or finds or wells or whatever. It could still purely on that basis, and also on the basis of if the scam assets being exposed, money shifting, why not hold oil? Is barrels of oil not a bit safer than crypto digits in a Bahamian Bahamian wallet? I don't know. I know you have wallets in Bitcoin. I don't really know how it works, but you know what I'm saying. With some guy called Sam, with his that very curly hair and then pronounced features. I'll say no more. So yeah, those are the levels in oil on the weekly. Daily, looking a bit better on the daily. Again, we're sort of it's this area. We're sort of chopping. Left shoulder, head, right shoulder. We tested lower, we closed higher, but it looks like a lot of going nowhere. It does a little bit. We'll redraw the diagonal resistance. We'll pop it on here. We'll make it orange, so you can see that captures that low here and the wick high here. It needs to be overcome. If you think that's going to happen, you would get buying now while we're underneath it. At any time underneath it, as long as we start hold 8520. Might be a retrace. We might need to roll over, come down back to this point of origin. Here's at least 86 on the lower time frames, maybe, because this is unstable. Emptied out area. This is a heavy flower head on the thin stem. What about oil in context? So I've reversed my ratio, so it's not dollar CAD against WTIC anymore. I've done it so it will look the same, in the same orientation as oil of the oil chart above. So it's easier to spot the similarities and the differences, the parallels. The long and short of it is we're over the 14 and the 50, so that's a buy oil signal. Sort of very long-winded divergence on momentum at these lows. Yeah, what more is there to say? ExxonMobil as a stock losing a little bit of momentum against the underlying commodity. There's uranium against stocks. Just as we were looking at, just because we were looking at that earlier. Is there anything much more worth looking at? High yield. This channel, we've flagged it. We've broken out. We've tested the top end of the flag. What happens next? Really weird stuff going on in this indicator. There's your positive reversal. So until there's, it's not in a great. This is the thing. The overall context is buy, is strong, is long, is good, has a good look to it. But the specific zone, in terms of where we are right now, in terms of immediate price action, isn't the best. But the overall context, again, I keep going to keep reiterating this. The overall context is dollar weakness, anti-dollar assets up, and that means metals, it means uranium, it means oil, it means high yield, it means semiconductors. That's the overarching context. This is the bonds ETF. Made a very big low. Are we going to see some relief, or is that the relief? Is that the bounce? Just for fun, here's Bitcoin. Where should I put the second red line? That's one heck of a zone. I am going to make it a big zone. I'm going to make it a chunky zone. A 2,000, nearly a 2,000, well no, 1,400 point zone. And why not? It's not a good look. And when you zoom out, it gets ludicrous because you go back to 7 years, 8 years, and it's at $230, $260, $300, and here we are still. Well, you go crikey. Well, it's that doesn't look like a 16,000 plus point move on the chart because of the logarithm. You can make the case that there's your divergence, there's your positive divergence. There's been an enormous amount of bad news. Again, bad news is good news. There's been these scammers, there's been these frauds exposed. Maybe the washout has happened. We've got our positive divergences. We've just taken these wick lows here. Great place to buy. There's no more sellers. Alternative take is it's fucked. Try buying again at 10,000, then 7,300, then 3,640, and lower and lower and lower, basically. On the weekly, there's a negative reversal on the RSI. There's the daily. Get rid of these silly little delete all draw objects on this time frame. Yep. Enough daily lines. Let's just focus on the long term. Not a good look to it. Is anything happening on the hourly? Not a lot. Not a lot. We've made this fall and now we've just spent hours chopping around, going nowhere. And it's the weekend. Yep, that concludes things, I think.